In today's episode of Crypto Over Coffee, the coolest and most caffeinated weekly crypto show on the internet, we're talking about the death of crypto as we know it and what's to come in the future. We've also got our 404 Logic Not Found segment and a bunch of crypto news, so make sure you stick around for all the updates we've got on the show today. Now, if you like crypto, please subscribe to the channel and hit the bell notification button, or you can follow the podcast on your platform of choice so you get a heads up whenever I post new episodes of Crypto Over Coffee every single weekend. And by the way, make sure to watch out for scammers that are all over social media impersonating me, pretty much every platform, Telegram, WhatsApp, Twitter, YouTube, especially in the YouTube comments. So please be careful out there and don't give anyone any money or information. Now, the headline of today's video reads, "Crypto is dead, long live crypto." And that pretty much perfectly captures the era that we are entering right now in this space. This is about the time in the whole cryptocurrency cycle of surplus, death, rebirth, and back again, where people start to accept that we are and have been in a bear market. And people didn't like it when I said it months ago, and people won't like it anymore now, but we are in a bear market. At least on paper, we are in a bear market. The perma bulls are now starting to acknowledge it as well, and you're starting to see the loud crypto personalities going really, really quiet. And you know what that means. It means that we are nearing the precipice of reality sinking in. And we could very well see Bitcoin enter back into the low 20Ks. We could see many altcoins crossing all-time lows multiple times over. And even Ether may succumb to price retraction despite the hype around its upcoming merge event in the late summer. The Terra Luna and UST saga is only a mile marker, a significant one though, on the road that we were already on, frankly. The bank run and collapse of UST stablecoin is a modern day MT Gox, DAO hack, etc. And it's a catalyst for a phase of growth and change in this space that's been overdue. The excuses as to whether UST's collapse was an attack or resultant of manipulation are purely minutia because it collapsed all the same. Whether it was coordinated or purely accidental, the system failed. A system that was selling stability, mind you, was not so stable. And that's the story, not who caused it. To the people who are discounting this event as orchestrated, if you believe that, then that's fine. And that may be true. But the answer is to build more resilient, tamper-resistant systems with decentralization at the core. And clearly, UST and Luna was not that. Just like MT Gox for Bitcoin and the DAO hack for Ethereum, this catalyst event will mark a turning point for crypto all the same, whether it was purposeful and malicious or simply serendipity. All the other algorithmic stablecoins are on notice now, near USN being one of them, because the biggest experiment failed. Trust is at an all-time low here, and it's a lesson learned for me and for others that no matter how big the sandcastle walls, a big wave can come and render those walls pretty darn useless. In this case, the fragile stability of algorithmic stablecoins lacking true collateral are the sandcastle, and the pressures of a faltering crypto market are the wave. Whether you like it or not, highly regulated collateralized stablecoins like USDC are primed to take the leading role in this space. As we look more and more likely to be entering into a recession in the United States and frankly many other places around the world, the idea that crypto suddenly explodes with value is hopeful at best, bordering on delusion. As other risk assets, things like equities, for example, are starting to meet a similar fate. Look at tech stocks, for example. It's hard to imagine many scenarios, if any, where the crypto markets do much else but succumb to the lull of a bear market as well. This doesn't mean, though, that hope is irrevocably lost. However, many of us have been on this rodeo before, and as you hear repeated like a broken record, historical performance is not an indicator for future performance, and that is 100% true. But I will tell you from experience that history echoes. It doesn't always work the same, but it echoes. Crypto as an industry has been declared dead more times than I can count on my hands and toes, and it has roared back to life at the most curious and unexpected times. And why is that, right? Why is it? Because this industry is resilient. It's constantly evolving. And for all its nonsense and grifting and scamming and nonsense, that we all have to acknowledge, it's largely focused on positive outcomes and just causes. Though no just cause or vision for the future will be likely to quell the concern that you may feel if you've watched your portfolio dissolve into a shell of what it once was, particularly if you're in the negative. And I empathize with you if you are in this position, because you are not alone. Most of us, if not all of us, have been there. If your time horizon is long, it's likely, but not guaranteed, that you will recover with patience. Again, not guaranteed. If previous bear markets are any indication, this will be a make or break time for many cryptocurrency projects that were born during the surplus of 2020 to 2021's bull market cycle, if you like to buy into that whole narrative. Now is the time to build, regardless, to set solid foundations for the next big run that I do believe will happen well into the future. Many will fail and never recover, which I want to talk about more later in this video, actually, but others will be prepared to truly capture the moment when everything recovers. Bear markets are for builders. Now, before I dive into some crypto news stories, I wanted to quickly thank Masterworks, the sponsor of today's episode. Masterworks provides its members access to fine art as an alternative investment uncorrelated to traditional markets. Based on research and art trends and projections on the future value, Masterworks purchases contemporary art and makes that art investable to Masterworks members only. The art that they buy is then held over time until Masterworks identifies the ideal time to sell, and then once sold, the returns for that art are distributed to the investors on the platform. And if you want to skip the wait list and join Masterworks to check it out and start looking into investing in contemporary art, make sure to sign up using the link in the description, where you can also find important disclosures related to the service and know that all investments have risk. Next up, I wanted to head over to the computer as well to check out some crypto news stories from the past week. I've got a few headlines to cover, so let's dive into those. And thank you to Onyx Coffee Roasters for providing the coffee for today. Not sponsored, of course. I bought the coffee. All right, so I can't see this. Let me pull it over closer. So the first story of the day that we've got is from Bloomberg. So a slightly different publication than we normally read. The headline reads this: Lagarde says crypto is, quote, worth nothing and should be regulated. Bullet points underneath, so subtext: digital euro will be a safer store of value, ECB president says. Comments come amid turbulent time for crypto markets. Now, this is really about as surprising as a proponent of the horse-drawn carriage saying that cars are too dangerous to use. The reality is, while I do think that eventually there will be a digital euro, a digital dollar, digital Canadian dollar, digital everything, that does not necessarily make it the sole place that people should use. And nor is it the role of a central banker or a government to decide unilaterally what people are allowed to spend their money on from an investment perspective. People should be able to diversify into a wide variety of things if they'd like to. Gold, so precious metals, things like that. Equities, so stock, real estate. People should be able to own many different things and do so freely. At least that's my philosophy. The reality, though, is that this is probably the least surprising headline for the times right now. For all the people that are thinking about the Luna and UST story and what this really means, this is, whether it was something that regulators are looking at very seriously or not, probably they are. It's just a perfect opportunity for them to show what they believe to be the instability of crypto. And that's just the truth. Opportunistic, or whatever you want to call it. That's just the reality. Regulation is inevitable. That's just the truth. People don't like that truth, but it is just the truth. And what ultimately this comes down to at the end of the day is there will always be this disconnect between folks like Christine Lagarde from the European Central Bank and people like us who believe in this space and others. Both sides are going to probably never see eye to eye with the other. And that's just the way it's going to go. So we should not be spending a bunch of time freaking out about this type of stuff, trying to convince people who will never be convinced, ever. So the reality is, yes, that these types of stories are annoying or sad to read, but the reality is this is a large group of people who believes this. So you're not going to change their mind, and that's just the unfortunate truth. The next story is from Cointelegraph. The headline reads, Ethereum devs tip the merge will occur in August if everything goes to plan. Core Ethereum developer Preston Van Loon says that the network's long-awaited transition to proof of stake will most likely happen this August. First of all, selfishly, I really am happy to see that this is August because I was thinking late summer was my prediction, and I'm thinking that everything is still going to plan because that timeline is still kind of sticking. It looked to me like the testnet plan sort of landed us in that August-September timeframe, late summer, early fall. And I think that right now what this says is that things have to date gone to plan with all the testnets for Merge for Ethereum proof of stake. Now, I think the big question that people are asking in their minds is this going to be a really good thing for Ethereum, or is this going to be a really bad thing for Ethereum? I think it's going to be a little bit of both. I think there's going to be a little bit of expectations versus reality. This is not going to be a Ethereum is proof of stake, all of its problems go away. And I think there are a lot of people who think that mistakenly. But I also do think that this is a huge first step in moving Ethereum into a new position, into a better position to start to solve some of the scalability challenges and other challenges that exist in this ecosystem that maybe aren't even related to scalability, around user experience, for example. Although I guess those two things are somewhat linked. What I think is most significant here is that this is a really, really long-term goal that will finally be achieved in the Ethereum space. And this will be something that's achieved during a bear market, which I think will be a really cool thing to see how the market reacts, both in the price of Ether, but also in the sentiment around this outside of just the crypto circles, and how well some of these publications, like the Bloombergs of the world, who have been trying to enter into crypto in their mainstream publications, seeing how well they actually understand this space and what's happening as a result of the merge. So I'll be watching that one. And then this last story, also from Cointelegraph, is something that I think is interesting to talk about. And I'll read the headline first. Indian government's, quote, blockchain not crypto stance highlights lack of understanding. The stance has led to disastrous crypto policies, forcing several thriving crypto firms to relocate. Now, this was a very common aside, very common thought in the 2017 bull run, especially in the hangover afterwards as we moved into 2018. Lots of companies, when crypto was no longer cool, prices weren't going up anymore. There was this whole thing of, hey, I like blockchain, the technology that underlies cryptocurrency, but hey, crypto, I'm not sure about that. The reality is these two things are inextricably linked, right? Inextricably linked. Blockchain technology, public blockchains, have native cryptocurrencies as a utility to pay for public services, storing data, executing code, so using compute, and simply using the network for what it is intended for. Public blockchains, the true implementations of blockchain, rely on cryptocurrency. That's the reality. Okay, so you cannot split those two things completely away from each other, except in very isolated circumstances, right? In very specific implementation patterns. The reality, though, is you're going to be hearing a lot more of this during the bear market. You're also going to be hearing a lot more stories like the one that I talked about before with Christine Lagarde, the European Central Bank, right? A lot of stories around crypto is dangerous, crypto has failed, crypto is dead, blockchain not crypto. These are things you're going to be hearing during the bear market, and it is imperative that people don't try and spend a bunch of time fighting about this, because it really will make zero difference. And we've seen it happen many times in the past. It will not make any difference to fight with people who think this. What really is going to have to happen is that you build to prove people wrong. Builders are going to be the ones that solve this sort of problem. And when things come back around, maybe that's 2 years from now, maybe it's less, maybe it's more. When things turn around and the crypto markets return to business as usual, things look positive again, these types of things are going to start to go away again. And that's sort of the cyclical nature of it all. So very interesting stuff. Just wanted to throw this story out there because it's a very interesting concept, and I'd be curious to hear what you think, so let me know in the comments. Now, my friends, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails, stupid moves, or downright illogical phenomenon in the world of technology and cryptocurrency. And today's illogical soup du jour is centered around a phenomenon that you and I will be seeing a lot of in the coming months or years of bear market chop. And that is people calling out scams in crypto like it's a game of I Spy on a road trip. A bear market will, as I mentioned before, take down even well-run, promising projects right along with poorly run projects. It will not discriminate. The bear market does not discriminate. Of course, many people will watch these projects fold, fail, or pivot and immediately default to calling that project and its team a scam and scammers, respectively. This is where things get a little dicey, because it seems increasingly more common that people in crypto have forgotten the meaning of the word scam. So it's worth reviewing. A scam is defined as a fraudulent or deceptive act or operation, or a deliberate act to cheat someone out of money or resources, okay? So there's the recipe for a scam. It's a deliberate act or operation that fraudulently steals from others. Let's also consider the statistics for startups and young businesses, which most, if not all, the crypto projects in existence still qualify as, by the way. And the stats are pretty eye-opening. 90% of startups in general will fail. 75% of venture-backed startups fail. And only a third of startups make it to the 10-year mark. I mean, should I go on? The odds are already stacked against every crypto project when it starts, and succeeding in a bull market is a fleeting, small time window that ends very quickly when the bear market reality comes in. And when you consider that a large majority of startups that fail end up failing due to cash flow issues, you start to understand why crypto startups so often meet the same fate. Make no mistake, you will see some big names that were never picked to fail coming forward to investors to announce that operations cannot continue. And I've already started seeing this from less established crypto projects, and more will keep coming as this whole era kind of unfolds. The age of free money is basically over, and it will be very hard to stay afloat for many of these projects who don't have cash to sit on and to continue building. That said, when these projects fail, that's usually not a scam. That's an investment that people made in a startup with a 10% chance of success from the jump that didn't work out. And this is not to say that there aren't scams. There are plenty of them, and we should call those out loudly and make sure people know who perpetrated those scams. But that only makes it that much more important to call out only actual scams as scams and not lump in any failed project that rendered someone a loss on an investment, okay? This is a Wild West space, a rapidly maturing Wild West, and it's also one that's rife with risk. So you have to tread carefully and enjoy the ride. And please share the definition of scam with everyone that you know so we can nip this in the bud, because calling a failed startup a scam and assuming that there's intent is a logical leap that can only be a 404 logic not found. Now, today's Q&A segment is brought to you by Shiryo, a NFT trading card game built on the Ethereum and Polygon networks. Shiryo is a strategy-focused, turn-based card game centered around the story of the lands of Idrea, a fictional world filled with mythical creatures depicted and playable in the form of NFT trading cards at launch later this year. Within that game, players will utilize their packs of NFT trading cards to duel one another, both casually and in a wager-oriented tournament mode, to earn the native Shiryo token. If you want to learn more about the project, check out the link in the description below. And of course, this is not a call to action to buy tokens of any kind, including NFTs. All right, so we're going to go ahead and dive into the questions now. And it looks like the first question we've got on the books today is from Denzel Ferreira. It would be great to hear your take on Cardano's upcoming stablecoin, Died and Shen. Will we see the same kind of downward spiral? Clearly speaking about Luna and UST. So this is worry about Cardano's latest algorithmic stablecoin, or I guess it's the first, coming into the mix and meeting the same fate as Luna and UST. Now, I've kind of soured on a lot of the algorithmic stablecoins because I think there are clearly fundamental flaws here that I thought could be solved with economic forces, with actually with logic, right? With actual technology that you could solve this, but I'm thinking that it's not solvable in this case. The jury's still out in my mind, and I'm trying to work through that. But the reality is, let's talk about Died and Shen, how they're going about preventing this type of problem. And the short answer is, quote, over collateralization. In this case, to create Died, you've got Shen that you can basically burn, right? That's the idea. It's similar to Luna and UST. The difference is when we're talking burn, you're basically talking locking up as collateral in many cases. And the idea here is over collateralization. You're looking at a different ratio. I believe it's 1 to 4, in between 1 to 4 and 1 to 8, JED to Shen in value, right? So basically that means you have 400% or 800% collateralization. And what that would basically mean is you have a little bit more space, a little bit more room to run before you start to have this downward spiral effect, or you start to see risk of depegging start to rear its head. I also read briefly about this mechanism where at a certain degree of pressure on the peg, a certain degree, you will no longer be able to sort of deal with the movement back to Shen from JED. At least that's my understanding. So I think that there are pieces in place to try and prevent this issue. And I'll do a little bit more reading on this, as well as I'm sure there will be content being produced about how they're going about this, because people are going to be asking quite a bit. And I will report to you, maybe I'll do a video about the mechanism behind JED and Shen. That's my understanding so far based on the limited stuff that I've read. You've got a new ratio, like a higher ratio, 1 to 4, between 1 to 4 and 1 to 8. So 400%, 800% in terms of over collateralization, and then a limit in place for moving out of JED into Shen and sort of blowing up supply. That's my understanding. If someone knows better and wants to share, please leave your answers in the comments so other people can see. But yeah, more to come on that. Please be very careful with algorithmic stablecoins, at least until the smoke clears on this and there are clear lessons learned. People should be really, really, really taking heed of the risks in this space on stablecoins. All right, next question is from Ghostman76015. It's been a while since I've watched a full episode because I've been working a lot to get several certs and move into a new position at work. Congratulations. Have you covered or heard about the WEF stating, the World Economic Forum, the average person will not own anything and they will like it? Subtext, I guess, or paraphrase. So here's my thoughts on this. The reality is, no, I do not like this idea. And yes, I have seen this WEF report, and I can't remember the exact way that they phrased it, but I think it was to the effect of, you will own nothing and you will like it, right? Now, I don't think that, despite how dystopian that it reads, that title, I don't think it was really intended necessarily that way. This is something that people actually believe. There'd be a shift from people anchored by ownership of property or whatever they want to say, anchored by the ownership of a home, of a car, of property in general, to this transient way of living. The nomad life, maybe. That's the idea. It's hard to say what the intent was. People are going to have very polarizing beliefs of whether it's malicious and purposeful or simply just an alternative worldview. Regardless of what you believe on this, I disagree vehemently with the idea that people are going to accept this idea of owning nothing and will come to enjoy that. There's a reason for that. The American dream, or it's not even just an American thing, it's around the world. The dream is that you create value, you work hard, you create an opportunity to earn resources for yourself and your family. You buy property. Mostly people are going to be aiming for their whole life to buy a home, to buy property where they live, maybe to own a car and some other necessities of life, wherever it is that they are. Consumerism is a big part of the world in general, and that's just a reality that I don't think is ever going to change. And so WEF creating a narrative like this, to me, doesn't really make a lot of sense, because world commerce is predicated on owning lots of stuff. So if you're owning lots of stuff and that's what the whole world economy is based off of, I'm not really sure what they're trying to achieve here. Whether crypto is thought of as a threat to this model or not, yes, crypto in many ways is designed to give people the opportunity to own something. You can own an NFT, you have more ownership of your money, you have more ownership of your financial services. Yes, these are all great things, but the large majority of cryptocurrency projects in many ways are actually not achieving that end. A lot of crypto projects are focused on making money, and that's not about ownership, especially not ownership for the average person like you or me. It's focused on making and enriching a lot of early investors, a lot of bigger people, bigger entities that are involved. And so crypto in many ways echoes this idea that, frankly, you may not own anything because that's just the way it's set up. These are businesses in a lot of cases. And so I think we also need to look inwards at what we can do in this community to actually create that opportunity for people who may not have ever had a chance to own anything, and to give them that opportunity. There are definitely projects out there that are doing this. There are definitely projects out there that are working to do this. I think that's the answer to this. Not fighting with a group of an organization that may not see eye to eye with us. I believe people should always strive to own things. I've always strived to own things, owning property, being able to provide for my family. It's very important. Others may not feel that way, and that's perfectly fine. There's a difference in opinion. The reality is the only thing you can control is what you do. And so for me, the way I've been looking at this is, if I believe a certain thing, I should work to fulfill that and to make that a reality for myself and others. So that's the way I approach it. Maybe I'm totally crazy. Maybe it's just, cliche, but that's the way that I feel. So thank you so much for your question. And that's my fundamental belief. Short answer, no, I do not agree with Wef's statement there. It is pretty scary. Now, I want to thank you for watching this and every other episode of Crypto Over Coffee. Whether you're listening on the podcast or you're watching on YouTube, I really appreciate it. If you have some time to stick around, I'll link up a new video if you're on the YouTube platform, if you want to watch some more crypto content. But most of all, I want to thank you and your family so much for supporting the show. I want to wish you and your family a wonderful weekend and week ahead. And until next time, cheers.